is a quiz that we are going to take now. So I officially welcome you, and I'm looking forward to seeing the winner for tonight. All right. So winner takes, of course, we're going to do number one and number two. Yeah. Number one is going to get more than number two, like we always do. So number one gets more. Of course, number two also gets something just to motivate the number two. So I hope there's going to be a competition that is going to be serious. Yeah, fantastic. So, guys, thank you very much for joining me this evening. We're going to begin with Mr. Hems, the man who is rich. Always begin with a rich man. That's the plan. Always begin with a rich man. That's the plan. Okay. Yeah. So, Mr. Hems, we have questions 1 to 10. All right. And I'm going to ask you to pick a question from 1 to 10. So, what's going to be happening? You pick a question and you have to answer within 30 seconds. Okay. So, I'll be checking through the timer. So, I have my timer with me here. So, what I'm going to be doing, I'm going to be checking through the timer just to ensure that you're within the time. So, I'll be checking you through every 30 seconds. We ask somebody so that we can do as many questions as we possibly can. All right, that's going to be fantastic. Okay, these are the things that we need to see as we are making progress. So, guys, thank you very much for coming to this evening. Let's do this quiz. So, Mr. Hems, we have questions from question 1 to 10. All right. So, you pick a question that any number from question 1 to 10. So, we begin with Mr. Hems. Any number, Mr. Hems, question 1 to 10, any number.
Question
And
1.
we are going to be writing your points in our Excel sheet just to ensure no one loses a mark. Yes, Mr. Hems, any number 1 to 10?
Question 1.
Question 1, fantastic. Question 1 is always a good idea, I think. So question 1 reads, okay, explain the concept of audit and assurance. Of course, question 1 is fantastic. Your time starts now, Mr. Hems. Explain the concept of audit and assurance. You have 30 seconds, Mr. Hems.
The concept of audit and assurance.
Yes, Mr.
Audit
Hems.
is a review of the financial statements, whereas the assurance is the confidence that the financial statements are present a fair and a fair view, a free and a fair view.
All right, fantastic. So, Mr. Hems, that's incorrect. We say it's incorrect because it's not complete. The first part is okay. It's not complete. So, we go to Memory Shibuchi. Memory, good evening. And please pick a question from question number 1 to question number 10. All right. If you like, you can take up the question that Mr. Hems was asked. Okay. You can take up the question that Mr. Hems was asked, or you can take up a different question from question 1 to 10. Yes, Memory. What is the number? Memory.
Question 2.
Question 2, fantastic. So question 2 reads, the word audit comes from a Latin word audia. What does this word mean?
To
Should
audit
I repeat the question?
it means to review something. So in this case, it means to review the financial statements so that they are true and fair.
Okay.
To give assurance to the shareholders.
Fantastic. That's incorrect. The word audit comes from a Latin word audia. All right. That is incorrect. All right, fantastic. Okay, so that was so the correct answer. Maybe we can go to question number 3, just in case somebody wants to pick any of those questions. Okay, so now we are going to Olipa. Olipa, pick a question from 1 to 10.
Question 6.
Question 6, fantastic. Question 6. Define audit risk.
That one. Okay. Audit risk is what can I say? I just don't know.
You have 10 seconds remaining.
It is the process where
Your time is up. Fantastic. So what is audit risk? We explained audit risk in our fixed class, but I'm going to be able to give you the answer just in case somebody picks your question. All right, so we're going to go to Natasha. Natasha, pick a question from 1 to 6. So far, no one has scored a point. Audipa is at 0. Memory is at 0. Mr. M is at 0. Let's go to Natasha. Pick a question from 1 to 10, or if you like, you can pick the one that Audipa just picked, question number 6. Yes, Natasha, what's your question?
7.
Question number 7. All right, so question number 7 reads, explain the nature and objective of audit and assurance.
Okay, so
30 seconds.
The nature and objective of audit assurance. The nature is, no, I think let me say the objective. The objective first is to have, this is where, how can I put this? Oh my God, time is moving. The objective is to
15 seconds.
Okay, the objective is for shareholders to have a true and fair view of their financial statements that have been prepared. I think the nature is for them to audit their financial statements, a company's financial statements. I can put it in those lines.
All right. Okay, I'm going to give you 1 mark for that. Okay, you won't get 2. I'll give you 1. I've got some facts to it. Remember what we said? We said that an audit is an independent review of the financial statements, right? And of course, we explained the nature of audit and assurance. We split these two into 2 categories. We talked about audit, and then we talked about the assurance aspect of things. All right. So I want to, when you're answering, to look at those 2 aspects, the audit aspect and the assurance aspect. So what is the nature of audit and assurance? So you explain what audit is, and then you explain what an assurance is. We said audit is an independent review of the financial statements. That's what we said. And then an assurance, on the other hand, is the confidence that the statements show a true and fair view. All right. And we explained that the information must be both honest and unbiased. That's what we said. Okay, fantastic. Thank you very much. So you're getting a 1 for that, okay, because not complete. So Natasha gets a 1. The first one we have. Okay, fantastic. So let's go back. Let's go back to, we have, so, okay, Mr. Laxon, you're out of the picture. I'm unable to see you. Let's go back to Mr. Hems. Mr. Hems, pick a question from 1 to 10. Yes, Mr. Hems, pick a question from 1 to 10.
Question 10.
Question number 10. All right, fantastic. So question number 10 reads. Question number 10 reads. Shareholders need assurance that the published financial statements of a company are not dash, while directors need the assurance that the dash inside the company are dash. Let me repeat that. Shareholders need assurance that the published financial statements of a company are not dash, while directors need assurance that the dash inside the company are No, a dash. I think, yeah, there are 3 dashes. Shareholders need assurance that the published financial statements of a company are not dash.
Are not misstated.
Fantastic. While directors need assurance that the dash inside the company are dash.
Are free of errors.
Okay. So the first dash, yes, shareholders need assurance that the published financial statements are not materially misstated or wrong. While directors need assurance that the systems inside the company are working or running smoothly. So you got the first dash. Okay, we'll give you one. Give you one. All right. So you can see that this is going to be interesting. So we have memory. Memory, pick a question from 1 to 10.
Question 8.
Question 8. Explain the different types. State 2 types of audit and state 1 distinction. State the 2 types of audit and explain 1 distinction.
We've got internal and external audit. And then 1 distinction, I'll talk about the reports.
Yes.
So with the internal audit, the reports, the reports,
10
what did I
seconds.
say? The director of the board of directors do the reports, and then with the external, it's the shareholders.
That's incorrect. Fantastic. That's incorrect.
Have time? Do
So
I still have time?
Your time is up. So let's go to memory guess another egg. We go to Audipa. Audipa, pick a question from 1 to 10, or you can choose the one that memory just
Even
chose.
the types, sir? Are the types incorrect?
Yes. All right. So Audipa, to pick a question.
Question 4.
Question 4. What is the difference between internal auditors and external auditors?
Okay, the differences one of the differences is that the internal auditors are being appointed by the managers, and then the external ones, they are being appointed by the shareholders. And even in reporting, the internal
Yes.
auditors report to the managers, then the external, they report to the shareholders.
Fantastic. You get your 2 points. Okay, fantastic. That's great. So Audipa, your question was, you answered what memory. You answered what Audipa's answered. You misunderstood the question. It was, what is the different types of audits, not the difference between internal and external audit. The different types of audits of statutory audit and non-statutory audits. A statutory audit is required by law. A non-statutory audit is by choice. You remember that?
Yes.
Yes, fantastic. So that was the difference, memory. So you swapped. So Audipa, fantastic, you get your full points. So Audipa now has 2 points. Okay, let's see who gets the hands on the money. Fantastic. Audipa has 2 points. Let's go back to Natasha. Natasha, it's your turn. So Natasha, pick a question from 1 to 10.
7.
Question number 7. How are external auditors appointed?
Okay, external auditors are appointed by the audit committee, which comprises of the non-executive directors.
All right, you end there?
Yes. Or should I say shareholders? Yes. Shareholders appoint external auditors. They get to vote for them by the audit committee. Yes, done.
Okay, I'm not happy with that. It's not complete. So I'll give you one. There is a rigorous process that is carried out as stipulated by the law to appoint external auditors. So I needed you to touch on those. Of course, it's true they are appointed by the shareholders, all right, because they report to shareholders. Yeah, but there's a
All right.
process we discussed that is.
Okay.
You remember?
No, I don't remember it unless you you assist
Okay,
me with remembering.
fantastic. So there you go. I'm going to give you one.
All
Let's
right,
let's go
thanks.
to let's go to Mr. Hems. Mr. Hems, pick a question from 1 to 10.
Question number 5.
Question number 5. What are the benefits of having an engagement review?
One of the benefits of having an engagement review is that it gives value to the financial statements. It also gives confidence to the investors who are the shareholders that the financial statements are free from errors or from errors. It is also less expensive.
All right, I picked the last part. The first aspect, no. So an engagement review is less expensive because we don't check everything, right? It's a review of specific balances in the financial statements. So I'm gonna pick the last part. I'll give you one. Okay, we'll give you one. Yeah. We can't say the financial statements are free from error because it's not a full audit. Simply a review. Right? It's a review engagement. That's if you stuff. If we are doing a full audit, then we can give a positive assurance to the shareholders that the statements are free from material errors. But for a review, we don't do that. But it's cheaper because we don't get to do a lot of things as auditors when you're carrying out a review. That's fantastic. All right, great. Okay, so let's go to memory. Memory, we are back to you. Pick a question from question number 1 to number 10.
Question 9.
Question 9. Okay, so question 9 reads, explain 2 legitimate ways of reducing the audit fees. I remember this. Yeah. Yes, memory, 2 legitimate ways of reducing the audit fees.
By doing an engagement review,
Okay.
because an engagement review is less costly. I think that's what I can
Yes.
answer.
Fantastic. Auditor, do you want to finish that one? 2 legitimate ways of reducing the audit fees. You're on mute, Auditor.
Okay. 2 ways. Okay, what can I say? Maybe by not auditing everything. You just
Yuta
I'm just
So pick a question,
2 ways.
Auditor, from 1 to 10. We give you one memory. We give you one.
Okay.
We give you one.
Okay.
We give memory 1. The answer is not complete. Yes, Auditor, pick a question from 1 to 10.
Question 6.
Question 6. Explain 3 ways of dealing with the agency problem.
3 ways. Okay. 3 ways of dealing with agency problem. 1.
Yes.
That one. 1 by By choosing the correct
10 seconds.
people. By choosing the correct people. That one not sure any.
All right, fantastic. So we give memory an egg. Thank you, memory. Anybody wants? We are going to. Going to Natasha. Natasha, you can pick a question from 1 to 10, or you can answer the question that memory that Odipa was asked. 3 ways of dealing with agency problem, or you can pick a different question.
I only have one, but I'll pick question 3.
Question 3. Okay, so question 3 reads: explain the concept of stewardship.
Stewardship. Okay. So stewardship. All right. So stewardship comes in with managers. Managers are stewards to the shareholders' investments. So necessarily they have to increase the capital for the shareholders and their shareholders' dividends.
All right. Yeah. Okay. I'm gonna give you. You get all of them. But the concept of stewardship, we said that, like you have said, a steward means to look after or to take care of something. And we said sometimes these are shepherds. For example, if you go in the Bible, a steward is the same as a shepherd. All right. Somebody who's managing something for somebody else. All right. So in the concept of stewardship, we said the management are agents, all right, to the shareholders. The shareholders are the principals. So make sure you talk about agent and the principal kind of relationship, because the relationship is going to give birth to, you know, the agency problem,
Right.
the stewardship relationship. So anyway, I'm gonna give you all on this one, but please make sure next time you finish. And then we asked Odipa Ada, we said 3 ways of dealing with agency problem. Number 1, we said agents are human beings. Odipa, you remember what we said? The management are human beings. They are just people. They all get tired. All right. Sometimes they have problems that they need help with, and then sometimes they don't. So sometimes, if people are not doing the best in the company, what management can do, we said one of the things you can do is to introduce what is called performance-related pay. All right, where you introduce some incentives. So you can introduce bonuses, give them bonuses based on performance, or we said you can offer them share options, or you can offer them executive share options. So all those are some of the ways you can deal with agency problem. We talked about a number of issues of how you can deal with agency problem, and that there is one of the one of the ways. So remember that one next time. Next time, remember that one, Odipa. You can give them bonuses, because remember the agency problem. We explained it, but I want to explain tonight because there's a question on the agency problem. But the 3 ways of doing that problem, we said you can either introduce performance-related pay, all right? You can do performance-related pay, or you can do performance-related pay. Sorry, sir, I'm unable to talk. I'm on a live call. All right, somebody's calling me on a live video. Yeah. So performance-related pay is one of the things you can do to deal with agency problem. Right? You remember that?
Mm-hmm.
Yeah. You remember that?
Yes.
How to resolve the agency problem. Remember that? We said you can use performance-related pay, you can give them shares or executive share options, but also you can use corporate governance. Corporate governance is also another issue of you dealing with agency problem. Okay? But because under corporate governance, we are told that there's going to be NEDs and executive directors, the board committees, and there's going to be increased accountability. Of course, we can also talk about a few things about internal controls and stuff like that. But I want to go in details because there are questions around those things this evening. So those are the 3 ways: performance-related pay, shares, or executive share options. You can even use corporate governance. So I've told you 4. All right. So that was. So we go back to Mr. Hems. Mr. Hems, pick a question from 1 to 10.
Question 1.
Question 1: explain accountability in the concept of audit and assurance. explain the concept of accountability and the concept of audit and assurance.
External auditors are accountable to.
Yes, Mr. Hems, you have 15 seconds.
The concept of accountability in relation to audit, the directors or the managers have to be accountable. Whatever finances they are charged with in the company. I think that is,
All right, fantastic. Your time is up, but we are going to give you. I'm thinking. So what we said accountability means willingness to be held to judgment or to be able to account for how you've been executing your duties. So, for example, like you are saying, directors, they are making decisions in a company on behalf of the shareholders. So those should be held to account. So I think you're right. We're going to give you 2. We'll give you all the 2 here. So Mr. Hems, you get 2. All right, Mbela Chansa, good evening. You are late. Your friends have answered 3 questions each already. So pick a question, Chansa, from 1 to 10. I'm going to ask you 3 questions to give you a fair share so that you can catch up with your friends. I'm going to ask you 3 consecutive questions. Question from 1 to 10.
Question 7.
Question 7. Question 7 says, in the purpose of audit is to do an independent review of the financial statements so that it can be ascertained whether they show a true and fair view. Explain the concept of true and fair view.
So basically, that's when the external auditors are checking whether the financial statements are not misstated materially.
Okay, repeat that. I didn't get it.
Okay. I said what it means to show a true and fair view.
Yes.
That would be derived when, for instance, the external auditors are doing their audit work and they are checking whether the account balances and transactions are not materially misstated.
All right, fantastic. That's not clear. All right. Looks like I was logged out. Sorry about that. Okay. Fantastic. Looks like I was logged out. So, Chansa, what I was explaining to you was that the concept of audit and assurance, the concept of true and fair view states that information, when we say information is true, when you explain that concept, talk about these two things. Talk about the word true and then talk about the word fair. We said when you say the financial statements show a true and fair view, the word true, we said it simply means that the information that is contained in the financial statement is factual. It is the information that conforms with reality. All right. It can also sometimes mean that this information reflects the commercial substance of the business transactions. That's what it means when you say the information is true. It is factual, it conforms with reality, and reflects the true business commercial substance of the business transactions. Right? But not 100% true. It's factual, but not 100% true. When we say fair, we said it means information is not biased or is not presented in a way that's going to mislead you. So, for example, I give an example and I said, if you ask me, say, how old are you? I tell you I'm 45 years old. Yes, today I may be 45 years old, but what if I'll be turning 46 years old tomorrow morning and I don't tell you? It means it's not fair because I've told you information which is partly true, but not complete. So you go meeting people, you tell them, I talked to him. He's 45 years old, but tomorrow morning I'm turning 46. So for the information to be fair, if I'm 45 years old today and I'm turning 46 tomorrow, I'm supposed to tell you today I'm 45, but I'll be turning 46 tomorrow, so that the information can be fair. When I say I'm 45, it is true. But if I don't tell you I'll be turning 46 tomorrow, it's not fair because I'm going to mislead you. A week later, you'll be thinking I'm 45 when I'm 46. So that's how you explain the concept of true and fair. So fair, we said the information contained in the financial statement is free from discrimination and biasness. All right, fantastic. So ask another question. Question 1 to 10, pick a question.
Question 2.
Okay, so what determines the level of assurance given by the auditor? What determines the level of assurance given by an auditor?
I think it's the quality of evidence they've been able to gather.
The quality of evidence they've been able to gather. All right, is that answer complete? So all right, anyway, it's not very complete, but the level of assurance to be given depends on two things. Number one, it depends on the type of assignment to be carried out. Number two, it depends on the amount of evidence that has been gathered. So you've mentioned one, the evidence, you left the other one, the type. Because if you are going to do a full audit, a structured audit, the assurance is going to be different because you're going to do a lot of substantive testing on the financial statements. But if you're going to carry out a review engagement, the assurance is going to be different because you're not checking for everything, but just a few things. So the level of assurance that you auditors give is dependent upon two things: the evidence that is given and the type of assignment that you've been hired to go and do. So I'm going to give you one for that. So pick another question from question 1 to 10.
Question 5.
Question 5. What is the difference between reasonable assurance and limited assurance? What is the difference between... Yes?
Okay.
Go ahead.
From, I think, my understanding, when it comes to reasonable assurance, this assurance is given because when audit procedures are carried out or audit tests, they are based on a sample. Not 100% of the population is tested.
So the auditor cannot give absolute assurance, but because it is based on a sample, it can only be reasonable assurance, meaning to the extent that the audit was carried out. Okay, so limited assurance, I think it's
Your time is
a
up.
high level. Okay.
Your time is up, and that's not the correct answer. It's not high level. Limited assurance has got to do. Thank you very much, answer. Limited assurance has got to do with checking focus. Okay, when you are doing a limited, it's limited, like we said. You're checking for the focus or prospective financial information, right? So here we check a low level kind of detail. We don't check a lot of things like we do under reasonable assurance. When you are dealing with reasonable assurance, you, the external auditor, is going to do what? Is going to check the financial statement to a high level degree of detail. This is because there is a lot of historical information that has been presented to you by the directors and, of course, the company systems and stuff like that. For limited assurance, you are simply checking for estimates, and these are relating to the future. All right, focus and estimates. So you are limited in the way you give your assurance, because maybe you are just checking about you're checking focus when it comes to sales revenue, for example, stuff like that. All right. So this can give you some measure of restrictions, partially because you have also limited time, maybe, or maybe the company wants to save some costs. They don't want to do a full audit, so they just hire to come and check a few things, all right, just to ensure things are going on well and stuff like that. But for a reasonable assurance, you check everything to a high level of detail, all right. Whatever you check to a level of detail. Don't check 100%, but at least you do a fantastic job for you to be reasonable. So I'm going to give you one. Okay. I mean, I'm not happy with you, but I'm going to give you one because of the first aspect which you mentioned. So now let's go back to memory. Memory, pick a question from 1 to 10. Let's see who gets the money tonight. Question number 10. Explain the difference between the opinion expressed in a reasonable in a statutory audit and that in a limited and that in a limited assurance engagement. Explain the difference in the opinion expressed during an external audit and that during a limited assurance engagement. What is the difference in opinions? Your time starts to tick now. $20 seconds. 15. 10. We pass? All right, fantastic. Is there somebody who wants to take that question? Odipa, you're next. Do you want a different question or you want to answer that question?
A different one.
Okay, so memory, this question, the difference in giving assurance, we said when you've done an external audit, you are sure your opinion is expressed in a positive language. When you are doing a limited engagement, a limited assurance, your opinion is expressed in the negative language. That's what we said. So the positive language is where I say, in our opinion, the financial statements show a true and fair view. Under limited assurance, you say nothing has come to our attention that suggests that the financial statements are materially misstated. So all you had to say was, under limited assurance, you give an opinion in a negative language, while under external audit, you give an opinion in a positive language. You remember that?
Yes,
Fantastic. Yeah. So so there we go. So we have okay, there we go. We go to Odipa. Odipa, question number?
Number 2.
Question number 2. All right, fantastic. Question number 2 reads, state the 5 elements of an assurance engagement.
The 5 elements are the three-party relationship,
1,
the subject matter,
2,
the suitable criteria used,
3,
the evidence, and the report.
5. Fantastic. Great. You get all the other points. Excellent. Great. Fantastic. So Odipa gets 2. Let's go to Natasha. Natasha, pick a question from 1 to 10.
Question 9.
Question number 9. Question number 9 reads, explain the acronym DADA3.
DADA3.
Yes.
D is for documentation, A is for
Yes.
assets, the other D is for directors, the A is for, it's a DADA3. Okay, 3 I will say it's for third party. Then the other A is for, should I say systems? Accessible systems, internal systems, something like that.
Unfortunately, we give you 0 because this was extremely easy. We give you 0, Natasha. But you're right. Yeah, you.
Right.
Natasha, you start with directors, of course, and you've gone very well. You failed to finish it up, so we give you 0 because it's an acronym. You can't say part, and we can't give you 1. Right?
No,
Documentations, assets, directors, accounting systems, third parties. So you forgot accounting systems.
Yep.
Yeah, fantastic. Okay, so Natasha gets an egg from that. We give you an egg. Fantastic, great. That was good. We go to Chansa. Chansa, pick a question from 1 to 10.
Question 8.
What are the limitations of a statutory audit? And this is a free style. You can state either 2, you can state 1, you can state it's free. What are the limitations of a statutory audit? Your time starts now. 25 seconds. 20 seconds. 15 seconds.
Pass.
10 seconds. All right, pass. Fantastic. Is there anybody who wants to? We go back to Mr. Hems. Do you want to pick that question or you want to pick something else, Mr. Hems? Limitations of a statutory audit. The same question?
Yes, sir.
Okay, fantastic. What are the limitations of a statutory audit?
One of the limitations is that, as you are aware, in auditing, they don't do all the transactions. They depend on the evidence presented by the directors.
Yes.
Now, when the auditors depend on the honesty and the evidence which is presented by the directors, it's a major limitation. Also, it's also quite expensive.
Yes. Fantastic. You get the all 2 points. That's correct. Auditors have a limitation because they have to depend on the people they're auditing for information. Let's go to memory. Memory, pick a question from 1 to 10. Memory, pick a question from 1 to 10.
I'm sure she's been logged out.
Okay, memory is back. Memory, pick a question from 1 to 10.
Question 6.
Question 6. Define public interest in the concept of audit and assurance. Define public interest in the concept of audit and assurance. Ten seconds gone. 15 seconds. 20 seconds.
Public interest.
Your time is up, but you
Yes,
can say your answer
everybody.
now. Huh? All right, your time is up. Fantastic. Let's go to Olipa. Olipa, do you want the same question or different question?
A different one.
Different question. So public interest memory, we said there is no definition of the word public interest in audit. This word has not been defined. This is why we said you have to seek for legal advice before you can act in public interest. Remember that?
Unfortunately, no, I think I was not there.
All right, fantastic. Okay. So that's public interest. The word public has not been defined in audit and assurance. Okay, so there we go. All right, so let's go to the next one. We have Natasha. Natasha, pick a question from 1 to 10.
7.
Question number 7. What is the difference between professional skepticism and professional judgment?
Okay, professional skepticism. This is when a practitioner has an open and skeptical mind, like they need to have an open and inquiring mind. Then professional judgment, this looks at where a practitioner has the relevant skills, the experience, and the competence to do that.
All right, fantastic. Yeah, the first one is okay. The last one is also okay, except that you should add in exercising what? Judgment, okay? You must, professional judgment involves you deciding on your own using your relevant training that you've acquired, the knowledge and experience when you are making informed decisions. Yeah, that's true. So we're going to give you both 2. So Natasha, guess those 2. Fantastic. So Odipa, Natasha gets 2. Okay. Chance, pick a question from 1 to 10.
Ten.
Question number 10. Question number 10. State 3, suggests 3 ways in which the auditor may exercise his professional judgment. State 3 ways in which the auditor may exercise his professional judgment.
Mm.
20 seconds remaining. 15. 10.
When evaluating whether the evidence that has been gathered is sufficient and appropriate.
Time is up. Fantastic. So the 3 ways in which the auditor can express his professional judgment. Before I say the answer, I want to ask Mr. Odipa, have we asked you a question?
No.
Odipa, do you want to pick the same question or want a different question?
A different one.
Okay, so the 3 ways where the auditor may express his professional judgment. Number 1 is when you are determining materiality. All right. And of course, number 2, we said when you are drawing audit conclusions. All right. And then number 3, we said what you said when assessing sufficient appropriate audit evidence. Unfortunately, you said 1 out of 3. We can't give you 1 mark. If you had said 2, could have given you 1 mark. So the other way is when assessing management judgment, then the auditor can use professional judgment. Even when deciding on nature, timing, and the extent of the audit procedures, you can also use professional judgment. So auditor, pick a question from 1 to 10.
Question 9.
Question number 9. Question number 9 reads, what is the expectation gap? What is the expectation gap?
The expectation gap is like the way the society thinks the auditor, the duties of the auditors are, and the actual duties of the auditor.
Fantastic, fantastic. You get the 4 marks. Great.
Oh, okay.
Fantastic, fantastic. That's people think that auditors come to companies to look for faults and then report those faults and then get you arrested or get you fired. That's not what we do. That's not our job. The auditor's job is not to do a witch hunt, to look for faults. No, that's not the auditor's job. The auditor's job is to form an opinion on the truthfulness and fairness of the financial statement. So each one of you is meaning 1 final question, and then we conclude. 1 final question for each one of you, and then we conclude. So I'm going to go back to Mr. Hems. Mr. Hems, pick a question. This is the final question. Question 1 to 10.
Question 10.
Question number 10. All right. I don't want to get into the next set of questions. We're going to do the other set of questions on corporate governance in our next class. So question number 10, reads, I don't think you answer this one.
Let me choose another one.
What is the difference between an attestation engagement and a direct reporting engagement?
An attestation engagement and direct reporting engagement.
Yes.
In an attestation engagement, it's an arrangement where the client engages a third party to investigate to do an investigation on their financial statements in relation to the subject matter, whereas in the direct reporting engagement, the internal auditors report directly in relation to the subject in the report. I don't know.
And you are very close to the answer. An attestation engagement involves declaring whether a given premise is correct or not. For example, you review the interim financial statements. A direct reporting is what you said, just didn't say it well. This is where you, the accountant, report on an issues that have come up, right, during the course of your review. Then you directly report those issues. So anyway, there was, I don't know why I didn't just nail it, because you knew the answer. I don't know why you decided to just give up on that one, but you could have gotten the answer. Memory, your last question. So we're giving you an egg. I could have given you 1, but unfortunately it's a difference question. If you fail one aspect, everything goes sideways. Memory, your final question.
Question 4.
Question 4. Let's go to question 4. Okay, among the elements of an assurance engagement is the 3-party relationship. State the 3 parties involved in this relationship.
We have the customers, we have the suppliers.
Yes.
And yeah, the customers, the suppliers, and three third parties. Who else?
You have 5 seconds. And your time is up. That's incorrect. We go to Olipa. Olipa, do you want the same question or you want a different question?
The same one. Just trying the
Yes,
same one. I
yes.
just want
State the
to,
3 parties involved in this relationship.
the practitioner, which is the auditor, and the intended users, the shareholders, and the responsible party, the managers.
Fantastic. Great. That's correct. We give you the full 2 marks, Olipa. Fantastic. Good job. So we have Natasha. Natasha, pick a question. Your final question. Question 1 to 10.
7.
Question number 7. Wow. What are the benefits? Anyway, let me rephrase this. Let me rephrase this question this way. State 3 benefits of having an internal audit department.
3 benefits of having an internal department.
Audit department, yes.
Okay. All right. 1, they get to look at the internal controls to see if they're working well. 2, they look at the financial statements. 3, come on. Okay. I think I only have those 2. I think there's and it's cheaper. I think, yeah, it's cheaper because they'll get to look
That's
at
incorrect.
everything. All right.
Okay, so yeah, anyway, it's mixed. It's mixed. Some things you said were close to the truth, but not true, not completely true. So I'm gonna go and ask Chansa, do you want the same question? The 3 benefits of having an internal audit department, or you want a different question? Okay, I'm tempted to give you half, but I can't give you half. You said something that's a bit similar to, but anyway, let's see from Chachanta. Do you want the same question or different question? Pick your final question.
I can attempt the same one.
Okay, yes. 3 benefits of having an internal department. Having internal auditors. Yes.
They'll help in ensuring that the entity or the company is compliant with legal and regulatory requirements,
Yes.
and also safeguard of assets
Yes.
of the same entity. They'll also ensure that the controls are designed and operating effectively.
Fantastic. So you also don't forget one of the most important things. They provide checks and balances to, of course, the executive directors. So you get the full 2 marks. All right. So let's see who has gotten. Let's see who is the winner. So the winner of this context, who is walking away with an amount in our next class, we are going to give money. Let's say we're giving money in our next class. So in the next class, we're giving somebody money for winning tonight's quiz. Those who have missed tonight's quiz, feel free to participate in the next one and see how much you're going to walk away with. So what we have, you can see it's very clear. We have Mr. Hems, 1 plus 2 plus 2 plus 0, that's 5. We have memory 1, Olipa 2, 4, 6, 8. Olipa 8. Okay, fantastic. And Natasha 1, 2, 4, 6. Oh, looks like we have a winner here. And then Chansa 1, 2, 4. All right. So congratulations, Olipa, for winning tonight's quiz. You walk away with 8 points. Our next quiz is going to be based on the topic that we just finished yesterday, and we are going to have a different quiz. So in our next class, Olipa, you're going to be the one to be given the award. Thank you very much for your hard work. Thank you so much, Mr. Hems. Thank you so much, Memory. Thank you so much, Olipa. Thank you, Natasha and Chanza. So Natasha, you're going to be the second. So Olipa, you're going to get a huge chunk of the money. Natasha will get a smaller part of the money. So whatever money we're going to give you in the next class, Olipa will get more. Natasha will get. We said we're going to give number 1, number 2. So Natasha and Olipa are the ones who are going to get to be given some prize in our next class. All right. So if you want to participate in a quiz, feel free to let us know. We'll be happy to work with you. So guys, thank you very much. I hope this helps to remember a few things that you need to be studying. You need to be going through things when we learn. All right. So thank you very much for tonight and for coming through and for showing up. All of you have done extremely well. I promise you, you will never be the same after this session, partly because you've now seen other things that other people are not able to see, or that you just took for granted. For example, now you know they're important. You've revised a few bits and pieces. So in our next class, we are going to give Olipa and Natasha their prize, like we discussed, and then we're going to have another quiz next week. So guys, thank you so very much. Have a good night. May God bless you. And I hope to see you in our next episode. Now, just before we go, oh, okay, fantastic. Some people have looked at. So now, I hope, Mr. Hems, you've seen the importance of going through what we have learned. Right, Natasha, I hope this has helped you to see the value of going through. And Olipa and Chansa and Memory, I hope you've been able to see that it's extremely important to go through things when you learn. What do you think? What's your comment on this one?
No, it is.
It is.
My comment on this one, sir, I think I just wanted to find out. So this quiz was based on chapter 1.
Yes.
Then the next quiz will be based on chapter 2.
The next quiz will be based on chapter 2, and I can bring anything. For example, I brought you a question on audit, so I can bring anything, but I'll bring more questions from chapter 2, and also we're going to add some questions from chapter 3, depending. So you can even read ahead, okay? We're not going to limit ourselves to chapter 2. Read ahead if you have to, okay?
So these quizzes will be on Friday, on Saturdays?
Saturday, yes.
Okay.
All right, guys, have a good night. May God bless you. Thank you so very much. Bye-bye.